right. Well, as we get settled here, very excited to talk about the future of digital currency. But first, I want to be a little bit provocative because we've been talking about digital currency for a while, and I think I've heard many a panel that is essentially what is the future of digital currency. So I'll challenge us a little bit to look at some things that have come out recently. I think. A lot of, or a number of countries around the world that had been looking into digital currency in the form of central bank digital currency, for instance, at a retail level, have recently kind of said that they're going to either pause or even abandon some of their projects and instead focus more on wholesale instead of on retail. I think digital currency has been evolving on the retail side and where to focus. And so from that standpoint, I want to press everybody a little harder on really what the future is, including what lessons have we learned to date that actually now tell us something different about what is going to happen. So let's start with you, Yamki, first. Thinking as an issuer of digital currency for yourself from Circle, what's the fundamental value, and is it about more than just payments? Because I've got to tell you, there are 1,000,000,001 examples of wallets and different ways for payment and whatnot. So tell us about what's really new in the core value going forward.
Well, first, it's good to see everyone. It's Friday afternoon, and you're here. That means you are really serious about this topic, or you're like a digital asset geek. So give yourself a hand for still being here. 1,000,000,001. That happens to be the price that Stripe acquired Bridge for, $1.1 billion. And why is that important? It's because companies are moving into stablecoins, and they want to be able to orchestrate and move stablecoins. Stablecoins are not all created equal. Well-regulated stablecoins are essentially digital money. USDC is digital dollar. And what do you do with money? What do you do with dollars? You use it as a payment settlement wherever it is used and accepted anywhere in the world. And the fact is that there's been a lot of debate of what is a use case? What do you do with this? Is it just a crypto thing? Is it a poker chip at a casino? And is it a payment instrument? Fact is that it's all the above. Digital currency, specifically stablecoins, is a way to do that settlement where it's faster, cheaper, and programmable. The first wave of adoptions happen to be in the digital capital markets. And what we're seeing now is actually the movement into payments as well as in traditional capital markets. Just a couple days ago, UBS announced that it has a tokenized money market fund. And the subscription and settlement currency will be a tokenized cash, will be a form of digital dollar. We already do that with BlackRock's BUIDL fund. Just last week, we announced a partnership with Tunes, which is a behind-the-scenes payments company that move money for your PayPals, your Remittances, your Renier, and they're using USDC to move money from Europe and the US to Asia faster and around the banking hours and the weekends and holidays that kind of get in between. And their customers want instant payments. They want it now, and it's already being implemented.
Those weekend hours definitely are challenging. I heard somebody say the other day, if you could solve payments from person A in country A with currency A to person B in country B with currency B on a Saturday at midnight and make it instant, you could solve everything. So.
Well, I think the fact is that most of the way we work on a day-to-day within a country tends to be like that. And I think companies, payments company, I mean, many around the room probably try to offer that, and that's what users expect, and that's what businesses want. But the fact is that the companies behind it have moved the money. They have to deal with a lot of pre-funding, a lot of high costs, a lot of risk management, and this is where actually a settlement currency behind the scenes can help with that.
So Carmen, let's go to you. So of course we touched on a bit of payments, and I challenged us to say, is it more than just payments? Is it bigger than payments? Talk to us about specific use cases and where you've seen the use cases mature specifically from a UNHCR standpoint.
Yes, so UNHCR, the UNHCR is basically the refugee agency, the UN refugee agency. We have pioneered cash assistance, delivering digital assets onto a wallet, and for the refugees actually to be able to encash them directly from their wallet. It's a USDC that we deliver, and we have designed specific options for them to encash. So it has to be obviously relevant. It has to be refugee-centric. We have to make sure that they can encash their assistance and go about their lives. So it's about their livelihoods and also about digital inclusion and financial inclusion, ultimately economic inclusion. So it's for real. So it is happening. It's not something that is not useful. So it is actually useful. So we are fully implemented and scaling up. In fact, we launched the first use case 2 years ago, and in Ukraine, and we are now in LATAM. And in LATAM, we can actually also off-ramp it. So the idea is not to off-ramp it anymore. So it can actually be directly used as USDC to meet utility bills and so forth.
So a lot that's moving forward in some of these use cases, and of course it's not just the transaction value, right, that's important, but kind of the movement of other information and how it gets distributed, correct?
Correct, yeah. So today we have credentials to do payments. The vision would be much more to create different credentials for health, credentials for education, and also for work, so people can really go about their lives and take charge, and with the ultimate outcome that they're not waiting for aid assistance, so they actually have their livelihoods and have a chance to actually survive and participate in that particular economy they're in. On the top of it also, these solutions are cross-border, so whilst this can work in one country, if they are on the move, it also works in the other country.
So let's pull up a little bit and move to the institutional level. Koki, from your perspective at AsiaNext, how do you see the markets, like the future markets, I guess, of tomorrow, and what role digital currency it does play now, but again, tomorrow is really gonna play from a killer use case standpoint?
Yeah, we are really looking forward to, the digital currency era where it's 24/7 and you get instantaneous settlement assets cross-border, even on Saturday midnight, as you mentioned. Why? Because AsiaNext is, we run exchanges, right? We run the crypto derivative exchange, a spot exchange, as well as the securities exchange all at one go. So for our customers, which are all over the globe, institutional customers, they like mobility of money, 24/7. And we operate the exchanges also on a 24/7 basis. So for example, our derivative exchange, we margin the client every hour, and therefore we need the funds to flow in and out quite frequently. Otherwise, there could be a default or a margin call situation that's not met by inflow of more funds, for example. And because we run it hourly on a 24/7 basis, Saturdays and Sundays are important. Otherwise, we have to bring up the margining, to buffer over the volatility that potentially can happen over the weekend. And therefore, digital currency helps. It's like engine oil, right? A super great engine oil to smooth the settlement rails, which otherwise we can't have on a fiat, right? So we can accept fiat collateral, which is actually good because it's central bank money. But as long as we have an efficient stable coin that's regulated, I think it will serve its purpose just as well, and that's what we're looking forward. And we have an account with Circle, and we welcome the world of the future where stable coins is the greased along the settlement rails. Yeah.
So
I like the super gray oil. That's a good way of describing it. Yeah. I'll use that.
Now I got that image in my head. I'm going to move us to a more infrastructure perspective. And Humphrey, perhaps you can talk from the objective and mission of Partior, and thinking from an infrastructure perspective, what's the real value here, and how do we achieve that through broader infrastructure?
Yeah. So, if we stick to the super great oil that we just coined, I think what Partior does is create the race course on which the cars can go faster. I think what we are is infrastructure, enabling that 24/7, that weekend payment from country A to country B, from currency B to currency D, and that instantaneously with assurance of delivery and lowering the risk. And thus, because I think the whole discussion about great oil and infrastructure, it's stable coins, it's all a means to an end. I think it's classical in the financial services that the needs of the markets is ahead of what the infrastructure delivers and the regulations. And I think what we're trying to do collectively in this panel as well, but the whole Singapore FinTech Festival, what we're trying to do is find the ways to catch up with the markets with that demand to have 24/7 settlement, guaranteed, and unlocking capital as well. The buffers that are required for settlement risk and counterparty risk, if we now, with digital technology, can do intraday trading instead of T+2 trading, the capital that's currently required to create buffers to mitigate risk, it's amazing how much value can be unlocked in that sense.
Yeah.
Yeah?
Exactly.
Well, we're certainly a fan of using capital efficiently.
Exactly.
So glad. So there are a number of critical questions that folks have so far frequently about digital currency and just about tokenization in general. To say, hey, the industry has been talking about tokenization for a while. They've been talking about digital currencies for a while, and yet we don't see the industry and we don't see tokenization moving forward as quickly as one would hope. So the question is why? And some kind of come at it from a critical lens of saying, well, perhaps there isn't necessarily need in all of the use cases that people are going after. But others would point out specific linchpins or kind of a trigger point that needs to be unlocked or needs to be addressed so that it can more swiftly move progress forward here. One of those things specifically that comes up is again on digital currency, the cash leg, kind of the payments leg of transactions that I think industry believes hasn't really been solved sufficiently yet to unlock a lot of other aspects of tokenization. So let's talk about that since it seems like a good kind of key use case. I guess first I'll ask Humphrey, do you agree with everything that I just said, or do you want to tell me that I don't know what I'm talking about?
I wouldn't dare. Let's start with that.
Not at the end of the day.
It's Friday afternoon. We're not going there. Beer is awaiting everyone after this. So there is a prize for everyone at the end of this. To keep it less contentious, I think you're right, period. What I do think is what I do think is that part of the difficulties in adoption is that markets, especially in the well-developed countries, are super efficient. Investment in new technologies and new solutions requires capital, and capital is scarce. What I think, also by your example, the use cases that you mentioned, it's in the Ukraine, it's in Latin America, because I think this is where the markets are less efficient, where the delta between what the new solution can deliver and what the current situation in these markets provides is far larger than in a super highly capital efficient environment. So I think, take Brazil as an example. If you look at the success of PIX and DREX, the use case is there because they came from far behind in an inefficient market, that it's easier to justify the business case to invest, and what you now see is they're ahead of the curve in many ways. Yeah? So I'm a big fan of what's happening in Brazil. You see great things happening in India. There's also size of the market. Singapore always tried to be at the front of innovation. So it's also the scalability of, can you absorb it in a smaller market to launch something new? And I think that helps. And then you get a ripple effect of, replicating what has been proven in these markets like Brazil, India, to then absorb in other countries. if that
So
makes sense.
perspective 1. Let's go to perspective 2. Cookie, same question, but from your perspective, coming from a distinctively markets view. How do you see this? The same, differently, and what do you think is perhaps a holdup? What do you think we need to do about it?
Okay. So first of all, I joined Humphrey. I wouldn't disagree with your view. Right? I wouldn't dare.
What did I do to these?
Yeah, no. So I live and breathe in the capital markets now, and I think digital money on chain is actually very, so-called important for not just payments that we just talk about the use case, but for settlement of financial transactions. And we talk about tokenization of real world assets and why that adoption is slower. Now, if you have a common settlement platform for fiat on chain, as well as assets on chain, for example, securities, then you can have DVP atomically settled, right, real time, and therefore it reduces counterparty risk. And so I think there is a broader use case beyond payments because there are trillions of assets there waiting to be tokenized to reap this efficiency. Now, of course, you need the whole ecosystem to get there. So some of the impediments I find would be, okay, the blockchain needs to be enhanced in terms of security, resiliency, as well as scalability. And I know a lot of projects have been ongoing to make that happen, layer 2, scaling solutions, and so on. And then on the other hand, TradFi or traditional investors still look for important elements like privacy and identity management, right? They want to be known on-chain only for the counterparty they're transacting with, for example, and not the whole world. So some of this marrying of both sides needs to happen. It's not just a technological set, it's actually the user set of requirements as well that overlay it to make it happen, yeah.
Mm-hmm. Multiple different things to pull together.
Yes.
So Yamki, if I move to you, Circle is licensed in a number of different places, and I'm sure that you see a range of challenges, just given the different areas that you're operating. What are some of those challenges, and what do you think need to be done to address it? And you can also tell me if you think I'm completely wrong as well.
Well, as the other gentlemen have said, Jessica's always right. I do not dare to contradict. But I think maybe taking a step back, I'm an economist by training, and I think what some of Humphrey and Cookie talked about is essentially a shift in the production curve, that money has moved in a particular way, and there's a new format and new structure. When you look at factories, they would produce in a particular way. Eventually, they shift to a new structure. And that's what's happening. In the same way, when we think of settlement of assets, we used to settle assets by paper, and then we decided to settle digitally, and then we have back office that specializes in settling digitally. We then move away from direct counterparties to centralized counterparties. These are essentially upgrades in the production curve. It gets more efficient. It introduces some new risk each time because we don't know what the new structure has, but overall, it gets better as a whole on a macro scale. And if there's a way to move money faster, cheaper, with greater certainty, why wouldn't we do it? More importantly, if you ignore the noise around tokenization, the term itself, what this next wave brings, aside from the speed of settlement and the instant settlement part, is programmability. I don't think we've talked a lot about that part that is fundamentally different between this new world and the old world. Even though settlement of funds and assets had previously been digitized, they were fairly manual behind the scenes, and they were sort of one-to-one type of transactions. What's possible on public blockchains is that these are not only just ledgers and truth machines, they are compute machines. They're able to do if-then statements that says, if you do A, I collect B in collateral. If the oil tanker moves X amount, I will pay you Z amount. And we can change the risk with the risk balance between the buyer and the payee. This hasn't really been explored yet. And I think that's what's going to create the new opportunities. Now, on the challenges, there's a number. First and foremost is the fact that the regulation hasn't been clear, and that's changing. We speak with many financial institutions. A lot of the organizations here have spoken with a lot of financial institutions. When they hear the word digital asset, they think crypto and they think no. When there's greater clarity, they actually come into the space. Many banks have been playing with blockchains actually behind the scenes on their own. They've been waiting for regulatory clarity to move onto public blockchains, so that's needed. What we saw in Europe was when MiCA came into place, the markets in crypto assets, when that came into place, it wasn't a bunch of Web3 companies that started getting into the space. What we got were actually traditional institutions, banks, asset manager, custodial firms that say, hey, now I can do this, I can touch this. There's no doubt about what this is. It's electronic money. It could be used for settlement. It can be used for collateral. It could be used for payments. It could be used for financing. And they're moving in. And what I expect to see, and what I hope to see, is that the regulation become clearer. It certainly will, certainly in the US. And here in Asia, Singapore, Hong Kong, Japan, soon maybe even some of the other jurisdictions will move into the space and provide that clarity, and then enterprise will move in. And there will be a day where we don't talk about tokenized money market fund or tokenized assets. It's just how you buy and sell assets when you can buy it in micro amounts, when you can settle instantaneously, and you can do it 24/7, even on weekends.
So I agree with your aspirations for the U.S. I really hope that greater clarity and frameworks can come into place sooner rather than later, as it certainly has been a while that they've been sitting a bit stagnant with authorities. So hope in that direction. Let's go back to you, Carmen. I've always personally believed that emergency cases are perhaps a prime use for digital currencies, in part because of the programmability that Yamki also just referred to. So what do you think is holding things back in terms of broader scalability around the use of digital currencies to actually apply to emergency cases where funding is needed?
Yeah, I think generally speaking, digital currencies will give us so many more options for all these people that are on the move. So imagine any of you right now in here, we have 120 million, more than 120 million refugees. So this is unprecedented. It has doubled in 10 years. So the key is that we have as many solutions for these people as we possibly can have. But I think what happens right now is, for sure, is also the regulatory aspect, to some extent also the compliance. So compliance can also be built in programmable delivery. So all these data analytics will give us so many more options to actually direct. We were talking about oiling and direct the traffic. That so many more things actually become possible for these people, the most vulnerable, the people in need that we actually need to serve, and we need to do this efficiently. So we don't want to go through cumbersome processes, systems, and it takes for ages that people can get the aid. So the speed is actually of the essence, for sure. Any of us, imagine any of you being a refugee, you're waiting for assistance, but then more so that you have all the optionality, how you actually can go forward with these tools. So the whole literacy on the future of finance, the future of money, you're basically building up that knowledge. So it's really a comprehensive toolkit that we want to provide.
Actually, can I build on that point? Because I want to just build on the analogy that you had, which is you have the oil, you have the road. The regulation part not only provides clarity, which I think the digital asset will talk about, it's also important to set the high and good standard that's needed, especially if it's being used for most vulnerable. In the same way that you don't want to have bad oil in your car, it's important that when a stablecoin is regulated, it's actually real. That there's money that backs it, there's transparency around it, that there is good compliance around it, there isn't illicit finance surrounding it. So the regulation piece is crucial, not only for the clarity, but really for consumer protection and investor protection. And that's part of, I think, what's going to be needed to actually move the market forward.
Well, and I've always thought about some of the applicability, again, of the programmability aspect of it, from the I guess, customization of a particular emergency or a particular case. That I think about in particular the U.S. oftentimes and other countries send a lot of aid to places, and they essentially ship over pallets of cash that sometimes disappear, and then you have an investigation afterwards on where did all of the cash go, and you have taxpayer dollars that have to pay for the investigation and things like that. That I imagine that some of the programmability and the ability to kind of customize aspects of those applications could be very beneficial to governments as well.
Yeah, you have full traceability, accountability. You will not have to wait for 1 year to figure out what happened. You will know it there and then. So when we send these payments on the blockchain, we can literally real-time watch as they're delivered. So any of you that would be a refugee, you can receive these aid assistance payments within minutes, literally minutes.
We over the past year, have been running impact competitions, most recently at UNGA in the UN, the UN General Assembly. And there are companies, startups that are building on blockchain around these sort of issues, but they're doing it at a much lower cost. An example of this is around climate risk financing. Providing crop insurance to much of the world is really expensive. And there are a couple companies that are actually using parametric data on the climate and be able to write smart contracts that says if there is X amount of rain, Y amount of wind, it triggers the payment directly to the farmers. And these are insurance policies that are $50, $40, that in the existing production curve to serve with a real insurance agent is expensive.
Yeah.
But you can actually distribute that insurance. And I don't want to call this aid, because this is not around like providing people who don't have. It's around providing people that are just not being able to serve. You would not be able to serve an existing cost structure. And blockchain and the availability of data and the programmability of these blockchains and programmable money makes that possible, and it's really good for the world.
Because on the climate side of things, you can have models on predict. You can actually have the data analytics to predict of an event to happen, not to happen. If it happens, you're obviously ready to deliver. Yeah. So this is the power of the speed and using the technologies and not having people waiting for 6 months now because an event occurred.
Yeah.
So let's actually stick with the climate theme for just a moment. I'm going to take some questions from the audience, a number of them. One of them is that there's a perception that digital currencies consume significant amounts of energy and water, and what is the roadmap to a green value chain and life cycle of a digital currency? So perhaps, I don't know if either one of you on this side of the stage want to take it from the larger institutional standpoint.
Yeah, so a lot of institutions, a lot of listed companies, they are now looking at the whole value chain, right? The whole supply chain, and making sure that they are seen to be green. They've set net zero targets as well. They have to achieve it over a number of years. And therefore, I think when dealing with us, our clients will also say, okay, can you make sure that you have a robust governance process to measure your emission and also tell us where you stand, because we can only accept counterparties that have like-mindedness in terms of achieving such targets. So when we talk about digital currencies, right, they'll be saying also if they send us digital currencies, like whether it's stable coins or some other digital currencies that are, for example, tokenized liabilities in futures, they will be saying, okay, they will look at how it's being transferred, the amount of the emissions that's generated for Scope 2, for example. And then they said, okay, how are you going to help us offset it so that we're seen by our stakeholders as dealing with the venue that cares about such things, right? So the qualification of venues will inevitably have to tick the box in terms of, so we are very conscious of such things as well, that we, first of all, for example, right, between proof of work and proof of stake, for example, something that's very energy consumptive like Bitcoin versus, so how do we then offset those so-called transfer, the gas fees and over the network that is being generated from those transactions. So clients are looking at such data, and we have to present it to prove our eligibility as well. Yeah.
Any other?
Not all blockchains are the same. So in our case, the transaction on the blockchain costs 0.00001 penny, something like that. So this is not a costly transaction. It's not a planet-burning transaction at all. So of course, you need to select the right pathway to do that.
For Circle, USDC is on 16 different blockchains. And the fact is that blockchains are not static. They upgrade, they get better, they get more efficient. The Ethereum change from proof of work to proof of stake is one of those examples. There are other blockchains that are much more energy efficient. But we need to take a step back and just think about that this is not necessarily a digital currency problem. This is a digitization problem. The fact is that when we move to electric cars, when we move towards greater trading of anything on exchanges, whether it's crypto or non-crypto, and when we look at what's to come with AI, these are compute engines. And what we've seen in the last couple of weeks are, Microsoft buying 3 Mile Island to turn on a form of renewable. Is Google investing in these? Is Amazon all moving towards actually pushing the boundaries of using renewable to power servers and machines? And we should put digital currencies in that context, where if we're going to have AI that's going to create enormous productivity for the economy with some risks, the settlement of value on the internet will be probably digital currencies. And that's a part of that equation, and how do we move that forward together?
I do think it's really important to keep it in context. I think that's a great point. I know I've heard a lot of discussion this week about just the digital economy writ large, and how much it is powering growth in the region, and the need to then find the energy to continue powering that growth, and how to get it into various countries, including here in Singapore, to continue moving that growth forward. Perhaps, Humphrey, I'll give you the final word on this question.
Yeah, no. I think it's can you hear me? It's a matter of perspective. I think it's a transition that we're in, and it might be that at the start of it, it might come across as being less efficient, but in the long run, what we're solving for is doing things in a more capital efficient way, in a faster way, and a cheaper way that solves for the problems of the end user. And I think if you look at end-to-end in a total context, I think there's no doubt in my mind that anyone that's involved in the digital currency or the industry at large, that the whole green footprint that we need to have is at the forefront of our thinking and in the design that we do. But it's ultimately that we know that with the use case that we're solving for, we will all be more efficient in total and more effective. Huh?
So I know we have just a couple of minutes left. I want to get to, there are so many different questions here. I'm going to combine a couple of them, and the one I'm going to put up on here is I think appropriate at the end of the day on Friday. As a normal everyday person, how can I capitalize on this evolution of digital currency? But a number of these questions also pull in kind of the reality of, okay, so I can get digital currency, I can get a stable coin, but at the end of the day, I have to use this in real fiat money in a lot of places today. So how can I, as the average person sitting here on a Friday afternoon, actually benefit from this, as well as specifically the question of refugees? How do you deal with that off-ramp situation? Because just getting a digital currency might not be all that useful otherwise.
Yeah. So the key is that regulators need to make sure that they also understand how these solutions really can benefit with all the reasons we just explained to each other. But the off-ramps is to make sure that we can access this financial ecosystem, and there is such a thing as having the context of each and every jurisdiction, how it works. And of course, that is the lengthy process to figure out how it all works. as the treasurer of UNHCR, we are in 130 countries. I know how it works in most countries. So the key is to have off-ramps that really can integrate. And there are off-ramps out there. They can do that. So you as the normal person out there and the refugees, they can then off-ramp. So they have the solution, either transfer the money directly to their bank account. That's also one way. Or they basically go in and cash it. But the key is that you can safeguard at all times your digital asset on your wallet and decide as and when you want to transact. In Latin America, for example, you can safeguard all the inflationary pressures that you have on your currency as you can safeguard in USDC, for example. So they are subtle and important benefits to that need to be harnessed, and you as a normal person already now in South America can easily harness this.
I see Yamki dying to have the last word. I guess you can have a 15-second final.
I'll try to be quick. I think the question was asked, a normal everyday person.
Yeah.
And if this week hasn't reminded me, is that we're actually a very diverse place. Even within a country, there are many perspectives and views, and there are many different experiences. And the way a person in a developed market like Singapore that uses how to interact with digital money, it's going to be very different from someone in Latin America or someone in Africa. Nobody's asking in Africa, how do I use money on a phone for SMS? M-Pesa is the way you pay for things in many African countries. Here, we don't do that. We may use it for sending money halfway around the world. So I think it's important to keep that in mind, that like how we use these digital currencies will be different in different countries, in different circumstances, in different populations. Someone like a helper, a domestic helper here in Singapore will use digital currency a different way than a trader that's on AsiaNext. But it's a settlement currency. It's a way to settle payments. And we're going to see this, I think, blossom over the next couple of years.
Well, there you have it. I need to get these folks off stage so that we can get to the next session. Thanks for being with us today on a Friday, and